I could send $1 billion from the UK to the US now, and it would be there in seconds. It would settle almost instantly, and it would cost me just a few cents. Why do I need some human or some slow computer system to say, yes, that transaction can go, and it's going to take 3 days, and we're going to take a small percentage? It's completely outdated.
So if AI agents become a real economic actors, do stable coins become the default payment rail for the internet?
But what people are forgetting is that AI and AI agents, if they're ever going to transact monetarily and act in the economy, they will have to use some sort of cryptographic blockchain-based asset or currency.
So most people still think that crypto as a speculation. What are the missing things about stable coins right now?
Don't write off crypto just because of the speculative and volatile nature. It really is the future on global markets that are always open and never sleep.
All right. So hello, everyone. So today in this episode of Venture Signals, James is joining me from UK. Hi, James. How are you? How is everything?
Hi, Merv. Yeah, thanks for having me on today. Yeah, really do, and looking forward to digging in.
Yeah, so as we started AI Insiders Venture Signals, and we are hosting investors from all around the world and trying to understand what's hype, what's real. And today I have some questions for you. So let's begin. So if AI agents become a real economic actors, do stable coins become the default payment rail for the internet? What do you think about this?
Yeah, absolutely. So we've been investing in blockchain technology for a decade now. And so I've been deeply engrossed in the whole space. And stablecoins have emerged as the #1 use case for blockchain. Now, AI and blockchain, AI is very hyped at the moment, and blockchain has taken a real back seat. Everyone saw Bitcoin go up and back down again, and maybe looked at Ethereum in the past, but it's really taken a back seat to AI. AI is like the thing these days. But what people are forgetting is that AI and AI agents, if they're ever going to transact monetarily and act in the economy, they will have to use some sort of cryptographic blockchain-based assets or currency. Yes, and so we've recently had the Genius Act go through in the US. The whole world seems to follow the US with regulation and monetary policy, etc. So the Genius Act has given the green light for stablecoins, and we definitely are zooming in now. And our sort of whole thesis and focus right now for this second fund that we're raising and deploying right now is stablecoins and the convergence between blockchain and AI. So yes, we believe that things like programmable finance, where AI agents can execute and read smart contracts, they will be transacting and trading on and off ramping with stablecoins. They'll be trading tokenized assets. So if you have an AI agent managing your wealth or a percentage of your portfolio, maybe it manages all of your portfolio, they will be transacting in stablecoins. They'll be buying and selling things. They'll be buying compute and data packages, and they'll be doing this in stablecoins. They'll be taking out insurance products, and they'll all be underwritten with smart contract based stablecoins. So yes, to answer your question in short, definitely we see a world where AI and cryptographic finance and stablecoins are inextricably linked and connected.
Nice, that's good. And right now, as AI agents are replacing the human work, or can we say AI agents replacing the parts of the financial system? What do you think about this?
Yeah, I think if you look at what AI actually is, it's intelligence and it's automation. Okay. Hedge funds have been using algorithms for a very long time now, actually. And market makers code algorithms. And that's ultimately what sort of controls the liquidity in the markets, in the liquid financial markets. So yeah, AI is going to play a huge part, and it's ultimately, yeah, it's going to be very key to the entire financial system. So I think as AI evolves, trading strategies will get more and more advanced. We recently invested, for example, in a sort of trading platform where you can connect all of your exchange accounts, whether it's Charles Schwab, all the way through to Kraken and Binance, and you can deploy your own AI trading bots, or you can join or allocate assets towards bots created by other people. And so although hedge funds and the top market makers have been using these algorithms for a very long time, it's trickling down now. It's becoming more mainstream. You've got thousands or millions of people even using agents such as OpenClaw and talking to ChatGPT every day. So this technology is slowly becoming available to the little guy. And we see a world where wealth management and portfolio management is going to all be automated and trickle down to the little guy. And so we're investing heavily. And yeah, that's ultimately part of the new sort of financial system.
Okay, James. So most people still think that crypto as a speculation. What are the missing things about stable coins right now?
Yeah, so people have definitely associated crypto with volatility and speculation because of the volatility. People are going in and looking for that 10x, 20x, 50x. And that's where really a lot of people have got burnt. A lot of even financial institutions, because crypto has only really gotten people's attention when it's gone on a parabolic increase and everyone's making a load of money. Then the herd joins and then everything collapses. And part of this is due, like the dot-com boom and bust back in the day in the 90s. Part of that is just because crypto and even Bitcoin is the biggest asset. It's very volatile because it's very nascent and it's very immature. If you look at Bitcoin's market capitalization, it's about $2 trillion. You compare that to gold, up at over $30 trillion. There's more volatility because there's smaller assets. So even Bitcoin as the king, the volatility is reducing. But as you go down to the smaller assets, the early stage tokens and projects that are available on the liquid markets, it is very speculative. The barriers to entry are very low, and moms and pops and your average sort of working guy can go on and get access to these assets, rightly or wrongly. So it has been heavily associated with speculation. A lot of people have got burnt, but that's why we see a world where stablecoins and tokenized securities are actually still the future. And so don't write off crypto just because of the speculative and volatile nature. It really is the future. We even have the likes of Jamie Dimon now saying that blockchain is real, smart contracts, nice stocks, markets can be made so much more efficient. If you look at the NASDAQ, for example, it's open Monday to Friday, 9 till 5 US time. Markets will all go on chain and they will be traded 24/7 on global markets that are always open and never sleep. That is the future. That is actually quite the near future. And so stable coins definitely play a huge part in that. And you shouldn't associate crypto with just speculation and here today, gone tomorrow, because ultimately the technology behind it, the blockchain technology, is certainly here to stay.
Nice. And from this, I want to ask you also, why are AI agents and stable coins are such a natural fit? Like, why can't traditional payment rails serve AI agents as well?
Yeah, I think there's a lot of rent-seeking intermediaries involved in the legacy system. There are also a lot of humans, and humans have to sleep, and humans are slow, and humans can make mistakes. And so when we set agents off to deal with smart contracts and they can read code and they can interact directly with things like private keys and cryptographic smart contracts that can be executed instantly, this is a whole new world, and it's going to open up efficiencies that we've never seen before. It actually kills me when I have to go into a bank account and make an international wire now, because I have to manually type in the address, even the intermediary bank address, and one letter wrong or one digit wrong and the wire can fail, and it bounces back 2 days later, and this is just crazy. We're in the year 2026, right? And so when we can just send things instantly with stablecoins, I could send $1 billion from the UK to the US now, and it would be there in seconds. It would settle almost instantly, and it would cost me just a few cents. Why do I need some human or some slow computer system to say, yes, that transaction can go, and it's going to take 3 days, and we're going to take a small percentage? It's completely outdated. And so smart contracts, stable coins, and AI agents to execute trades and buy things instantly, it's definitely going to happen very soon.
Nice. And if you were starting from zero today, Where would you build the AI infrastructure, stablecoins infrastructure, or the layer that connects to? What would you do?
It's a very good question. And what we're seeing is actually there's different layers and there's different market participants that have different requirements. So the crypto native people, the guys that have been on chain for 5 or even 10 years, they're perfectly happy going in to a DeFi exchange and swapping assets for themselves and doing self-custody with cold storage. But there's also the more traditional guys or the traditional financial institutions that have no idea about how to use any of this stuff, and it scares the life out of them. And so the first person I mentioned, their needs are very different to the second person or institution that I mentioned. And so we're seeing things like stablecoin first neobanks, so a mobile first application, maybe a bit like Revolut, but all stablecoins first. And you can invest in stablecoins, you can use DeFi products using stablecoins. This is different to what the institution needs. And so on the institutional level, we're seeing a lot of things like API infrastructure. We're seeing things like maybe not really like wallets and platforms for them to use, but infrastructure to make life easier for them to use stablecoins and do instant settlement without interacting with something scary. And so I think as a VC and as an investor investing in this space, we have to be mindful of the different target markets and users. And so there are lots of things building out at the same time in parallel. So to answer your question, I wouldn't necessarily think, okay, I'm going to pick that, because there are lots of things and different layers being built all at the same time. And so it's important to be mindful of that.
Amazing. And that's really great. And from this point, I want to ask you, like, how important is education in the go-to-market motion here? Because in categories, like sometimes you are not just selling a product, you are teaching a market how to think differently.
Yeah, it's a good question. Education is a very important part of what we do, both in VC and as a startup that we might invest in. I think, honestly, education surrounding crypto is very difficult. I think that people struggle to grasp digital assets. They can't touch them, they can't feel them. You start talking about public-private key cryptography, and it's very scary. And some people get it and want to dig in deeper, but a lot of people are like, no, it's not for me. And we have some portfolio companies that just talk in points. And you can top up your account in stable coins, and rather than talking about APY or percentages or things like that, you just earn points. We really simplify it for the user. So that's one example. But again, we have different audiences. We have to cater for different financial market participants. If you think about it, everyone is involved in the financial markets or the financial system in some way. So a stablecoin first mobile application neobank in Africa is going to be a very different user experience to an AI-powered trading platform for an institution in the United States of America. And so we have a massive broad range of innovation happening right now. And we really do have a global team that has to keep an eye on everything.
Awesome. That's great. And so the markets are changing quickly. So how much does real world proximity matter? Like, meaning the right dinners, events, or communities where people can earn compare notes before the broader market catches up?
Yeah, good question. So we attend a broad range of events, right the way from the crypto native events like Token 2049 in the Middle East, Dubai. I think they also do one in Singapore. We've got Bitcoin events. I started going to Bitcoin Miami way back in like 2018, right the way through to traditional family office events where we're going and seeing what the traditional asset allocators are saying. And it's very interesting that the show of hands in the room, do you own or hold any Bitcoin? The numbers in the rooms are completely different. So yeah, events are important. We need to get a feel of where the crypto native people are and also where the traditional financial institutions and legacy sort of wealth and family offices, where their heads are at. And there's a big lag. So you could argue that some of the family office and the sophisticated asset allocators are almost 10 years behind. They're very risk off, they're very conservative, especially in Europe, places like Switzerland. They're still quite scared of crypto for the most part. And we're going to have to really get very advanced in terms of regulation, and stablecoins are going to have to get to trillions in circulation before some of these traditional allocators actually start taking it seriously.
Okay, so have you seen any strong companies in this category? They use community, ecosystem design, or real world experiences as part of how they build trust with the early users and partners. Can you give me a couple of examples?
Yeah, I think best example to use to keep it AI related is the trading terminal platform that we recently invested in. They are taking a very measured and staggered and slow approach in order to build trust with the users. They're still in beta testing for the most part, but they have had periods where users have gone on and tried the AI trading algorithms for themselves, had winning trades, and then they've pulled it back to focus on things like API integrations with different exchanges. And yeah, it's important as a startup to really take things slowly and build trust within a community slower than you actually might want to, because everyone feels that need to sprint. Well, we've got to be there first, and we have to build the community. We have to get a million users as fast as possible. But as a startup, and we invest in pre-seed and seed stage, we often advise founders to take it slow, because if you have UI and UX issues and you have bugs and you have crashes, you can burn trust with users very quickly, to the point where you might have 500,000 users and something bad happens and they all go, sorry, I don't trust that platform anymore. And that community can be dead, gone. And so it's better to start with beta testing and ship to a few users and have them really test it rigorously, and have them know that, guys, things might go wrong, but we appreciate you being here. Maybe chuck them some tokens or points for being involved at the early stages, and just build it slowly and carefully. And then once everything has been foolproof tested and is really strong and reliable, then go out and do mass marketing.
That's great. Nice. I totally agree with you about that part. Yeah. The beta testers, UI, UX. Yeah. Okay. Another thing that I'm curious about, what sounds crazy today in AI and finance that you think will look very obvious very soon?
I think the one that springs to mind there is having AI agents buy things for you.
Mhm.
So you type in, I need this, and it turns up on the doorstep. And most people cannot imagine that. A lot of people, maybe older generations, would say, no, never, impossible. I think that reality is very close. That's the first thing that springs to mind. Yeah.
And what are the smart founders still too early to see, but not too early to build for?
Too early to see, but not too early to build for. That's a very good question. I'd actually like some time to think about that one.
Okay.
I think a good example of that would be what I alluded to earlier on about AI agents actually managing your wealth for you. So at the moment, most people have most of their net worth either in a property or a bank account. And that's what they feel comfortable with. They need a roof over their heads. They know they need somewhere to live, and they probably want to own their own home. And other than that, the money comes in every month and they have it in a bank account, and it's safe. And they don't really even think about foreign exchange risk or holding assets that are actually going to appreciate with the money supply. And so I think a big shift over the coming years will be having an AI agent, which will be very democratized. I don't think it's going to be expensive. Manage your wealth for you. Diversify your assets. So you're not all in on cash and real estate. You actually have money in the S&P 500. Maybe you have a few ETFs that are actually rebalanced periodically by the AI agent. Maybe the AI agent sees some geopolitical uncertainty and can actually allocate your assets somewhere else quicker than you can even think about it. But it sees something happening and it does it for you and it executes. I think that is a reality that we're soon going to see. And so that may answer your question. It may be too early for us to see right now, but definitely not too early to build for. And if you can play a part in that or become maybe one of the leading platforms that facilitates that, I think you'll make a hell of a lot of money in the future.
Great. Okay, so my last question is, what is missing today for AI agents to operate like real economic actors?
Yeah, I think smart contracts and programmable finance. So whether it's taking out loans, whether it's taking out insurance products, none of that can be done by an AI agent today. But I think with smart contracts and different token standards and full integration with stablecoins, wallets that are actually suitable for AI agents to use, probably some element of custody as well, where an AI agent can take control of the assets if you give it certain permissions. There's a lot of infrastructure that needs to be built out. But I actually believe that crypto is better for AI agents than it is for humans. So a lot of us that have done crypto and been involved with crypto, we've made it work, but it's pretty scary for most people. Checking like an address, or if I get one digit wrong of this address, the funds are gone forever. That scares a lot of people. Whereas an AI agent doesn't care. It's just code. It's just letters, numbers. It can read a smart contract in a few milliseconds and know exactly what's going to happen, and it's guaranteed. There's no sort of human error, and there's no subjectivity. So crypto is fantastic, and it is without doubt the money of the future and the money for AI.
Fantastic. Yeah, it was such a good conversation. I learned a lot of things, James. Probably people are going to learn it. Thanks a
I'm
lot for
glad.
joining. Yeah, thanks a lot.
My
Have a
pleasure. I hope it was
great.
insightful. And yeah, you can keep up with what we're doing on X. We're mainly on X. So x.com/Arcanum Capital. And we're on LinkedIn. We do a little bit on LinkedIn as well. And we have a blog and things. So feel free to follow Arcanum Capital. We do a lot of research reports and things, so you can keep up with the emerging trends. And thanks very much for having me on.
Thank you so much. See you later. Bye bye.
Bye-bye.